Hi,
Hi,
everyone.
Alyssa. How you
What's
doing?
up, Alyssa?
Thanks for having me. I feel like I'm on FaceTime with my friends.
Yeah.
It's basically what you
Uh,
it's basically what it is. Yeah.
Yeah,
well,
exactly.
thanks for joining us, Alyssa. I think this is your first time meeting Mike too, right?
And yeah, over FaceTime, I guess I
Yeah.
would
Got
say.
it, got it. Cool.
Yeah.
Pleasure.
Welcome,
Yeah.
Mike,
Same.
Alyssa, Mike. Yeah, so Alyssa, for those of you joining that are popping in, she's a. I mean, do you guys call yourself loan officers as hard money lenders? You still do, right?
So private money lenders. I
Private
mean,
money lender.
Private
We'll
money
go with
lender.
that.
exactly. Yep.
So she works at Cardinal Capital Group. She one of the things that that is really like helpful and interesting about Alyssa is she's an agent turned private money lender, which I think puts her in a very unique position to help her clients, to help other agents, to help developers, obviously.
Mhm.
So one of the things that we want to kind of tap into in terms of her knowledge is, how does private money lending work? And the reason I think that's a really important discussion is there's a lot of stigma out there about
Yeah.
what private money is,
Right.
what hard money is, right?
Right.
And I think let's kick it off with that, Alyssa, if you don't mind. Like, what are some of the things that what are some of those myths about hard money that people should know about,
Hmm.
and why can it be beneficial? Not just for kind of flippers or developers, but for just the general public to know about.
Yeah, absolutely. And Mike, just for your knowledge, I actually met Sod as an agent. I was a developer focused agent, and I
Okay.
actually met Sod at one of my broker opens that we had at Somerville, and so that's kind of how we got acquainted with each other.
That's
Um,
awesome. Well, I'm
so
glad I'm glad you're here. Yeah,
yeah,
this is great. Yeah.
absolutely. Yeah, so I'm Alyssa Walko with Cardinal Capital, and we are a private money lender, and our bread and butter is New England. So we have offices in the South End, here in Boston, Mass, and as well as two offices in the Connecticut area. So West Hartford and Madison specifically. And
Okay.
so,
Yeah. I
you
was there
know,
for Christmas. No,
oh, cool.
in
Okay,
Madison.
local.
Yeah.
Okay,
Yeah.
awesome. Yeah, it's a beautiful little coastal town.
It is.
Oh.
Yeah.
Yeah,
Yeah. It
so
is.
I mean, a quick train ride over there, so it's really convenient to get to from for us Boston folk, and kind of we go back and
Hmm.
forth to even site visits to collaborate with our other colleagues as well. But yeah, I mean, like for the transition itself, and we were talking, Saudi was talking a little bit about kind of the agent background and kind of what that looks like for you know helping folks and our borrowers now on what we're kind of seeing for their developments, their builds, things like, the underwriting aspect, knowing the market aspect, right? And so I think one of the questions that I get from borrowers who may or may not have, worked with private money is, oh, it's too expensive, right? It's too expensive, but too expensive relative to a bank, right? And
Hmm.
I'm not going to say that private money lenders are going to be competitive with banks in regard to rates or fees, right? But where we win the client, and the reason why we have so many of these institutional builders, guys and gals that work with us, is because of leverages, right? Is because we can really hone in on not only leverages but timeline, turnaround, right? And for yourselves as agents, it's like, hey, in scenarios, bank financing fell through, or the bank keeps asking for extensions or something like that. We can step in that scenario. Maybe not super fun on our end behind the scenes, but we can
Yeah.
close in 2 days. Right? We can close in 2 days. We can make that happen, right? When a seller might kind of stick their feet into the ground and say, hey, no extensions here, it's going to go back on the market.
Hmm.
Well, that's where we kind of come in, right? And we can say, we swoop in when a bank slows down, when another private lender might change terms, we're that kind of reputable lender there. And for years as a developer focused agent, I was working with these guys, and they're like, hey, I need some recommendations on financing. And so it was, hey, I'm working hand in hand with Cardinal there because we want to make
Right.
sure that who we refer in this industry is a direct reflection, right, on kind of our
Mhm.
network, our capabilities, and getting anyone to the finish line. And so, working indirectly and directly with Cardinal for years previously as a developer's agent, I knew how they worked. And that was also something really tactful that I love with what I do, is that we are a very tactful team in the sense that, um, as borrowers, you're kind of like, okay, who is my team? Who is the face behind these emails? In some senses,
Yeah.
right? And it's like, kind of merging with the lifestyle of an agent, these site visits, things like that, these networking events. I met a lot of them, if not everyone that I can make, right? And so with us, we're partners and not just lenders, in the sense that myself as an account manager, who's on your team as an account manager, an underwriter, a processor, and our asset manager, right? And so cannot say enough great things, about my team in that sense. And, as borrowers, it's kind of like, okay, hey, you can close in 2 days. Hey, you can close in 5 days. But the loan's closed. What are my next steps here? And
Yeah.
so you'll
Of course.
never have that question when it comes to us, right? The second your loan closes, we send you, hey, wondering about draws, this person, wondering about, another mid-construction refi that you might have, come back to me, right? And things like
Hmm.
that. So we're really tactful with every step of the way, because it's like, okay, we can get this across the finish line. The loan is closed in 2-3 days, but who am I dealing with in the next 13 months, right? Which is honestly
Right.
sometimes more important. Well, and most times more important. So
Hmm.
it's like, who here am I going to be talking to? So I think that's kind of like the gist of, I guess my background, the transition, and kind of why I love my team so much. But
Yeah.
if you guys have any like specific questions or like, assumptions maybe, or like myths, let me know.
Yeah, I mean, well, first of all, a bunch of people have joined. Interior Demolition, Mikey C, Velra 223, Interior Demolition said hi a bunch of times. We've
Hello.
got Tyler Lum. Um, we've got George Lum. I mean, I'm guessing these are folks that you might know, Alyssa. But we've got Mina here. So a bunch of people, guys. We're talking to Alyssa here today about hard money. We're talking about the myths, the ins, the outs. If you guys have any questions, definitely leave them in the comments, and we'll make sure that Alyssa addresses them. If not today, definitely maybe in a follow up or something like that. But Alyssa, like obviously, when I think about hard money,
Hmm.
and I think what most people in the industry think about hard money, it's about flipping, it's about
Hmm.
developers, it's about you mentioned it, like somebody who might be in a bind and needs like
Yeah.
speed to
Oh, of
get something
course.
done, right?
Hmm.
Is there an ideal client in your view that could be a really good fit for hard money and or for private lending? Like, is there a specific buyer profile that kind of like that makes it a good match?
Right. I actually was on the phone with a new borrower the other day. And so he was like, like I have a big portfolio. What can you do? Right. And kind of in high level, what we can do is we can do acquisition and construction. We can do a bridge loan if you're trying to secure the property fast and, efficiently, right? If the
Mhm.
seller says, I need this moved next week, right? And you're like, okay, well, I'm a little bit further along with ZBA and plans, things like that, right? So we can secure that up for you. If you're a mid-construction builder and you're looking for maybe replenishing your budget, you're looking for extra interest reserves, we can do a mid-construction refi.
Mhm.
Things like if you are somebody who has a portfolio and maybe inventory is not, moving, or the market's a little slower and you know that all too well, right? We can also do a real cash outs, right? And say like, hey, can I pull out cash somewhere and put it towards another project, right? That to kind of get things across the finish line. And also we do in terms of, these are kind of these 12, 18-month terms, right? But we can also do DSCR loans at the same time. So if you're looking at something and you're like, hey, I have a two family, for example, and I'm looking to add a third unit.
Mm-hmm.
What we can do is we can say, hey, okay, if the sellout isn't where necessarily like where it needs to be, and you want to refinance into a long term, stabilize the asset, get a cash flow property. That's something we can also do. So, and I was explaining this all to the borrower on the phone, and he was like, wow, you got a menu.
Yeah.
I think
Yeah.
that's also what
I'll
I
put,
love to take pride in is like really talking to the borrower and saying, hey, like, not only what's important to you, but what does the rest of your portfolio look like? Where do you want this current property to go that you want us to work with you to finance? Because like you were saying, what's the ideal borrower? And it's like kind of ideal, like borrowers are all different. Right. So, like, borrower A, for example, might have a huge rental portfolio where they're really cash flow, heavy. So they have a guaranteed kind of cash flow income monthly.
Right.
So they might want more towards the front end of their purchase, for example. Whereas borrower B might say, hey, I am a fix and flip guy. I'm a fix and flip girl. I really like that's my bread and butter. So they might not be as cash flow positive as this, rental landlord, so to say. So they might be looking for to be more dynamic in their deal flow and want more to stay, look liquid throughout the
Mm-hmm.
lifetime of their loans. So
hmm
we might look to say, okay, well, how do we get the most toward your budget? How do we get you the most months of interest reserves financed? So I think it's kind of like our ideal borrower is kind of like we work with their ideal terms and leverages, kind of
Right.
saying like, hey, this is where we shake out, what does this look like for you? What do you prioritize, if that kind of makes sense? So it's
mm.
So
not
it's,
kind of
but
like a
it's
one size fits all, if that makes
yeah. So
sense.
it seems like there's a lot of customization when it comes to hard money.
100%.
What about in terms of terms?
Yeah.
Like by terms, I mean like the the maturity of the loan. Is it always shorter than a normal conventional loan? Like you think about 30
Mhm.
years, you think about 20 years and 15 years. Is that possible in hard money, or is it typically much shorter?
Yeah, so the bulk of our loans are 12 to 18 months,
Okay.
right? So we can say, well, one, we kind of start with the borrower, hey, what, how long do you expect this to take, right? And
Yeah.
sometimes if it's a builder who's saying, this is primarily a cosmetic light rehab, we'll still do a 12-month loan term.
Hmm.
Can you?
I think we lost Alyssa.
Yeah. Alyssa.
We can't hear you anymore. We can see you.
Oh, can you hear me?
Oh yeah, now
There you
we can
go.
hear you. Yeah,
Yep.
yeah, we're good.
Okay,
We're
sorry, I
good.
got a call. Oh,
Oh,
We got
some
fireworks going.
all right. Now
okay.
we're getting
Hard money, let's
now
There we
go.
go.
now we're getting into it.
All
Yeah.
right, now it's a celebration. I was getting a call there, so I had to kind of swipe back
Yeah.
out of
Yeah,
it.
all good, all good.
um, so I'm not sure where I got cut off, but I think I
You
was talking about the 12 to 18 months.
you said
Yep,
a cos
yep.
you said a
Okay.
cosmetic
Okay,
light
yes.
light flip. Yeah.
Yeah. So the majority of our loans are 12 to 18 months. And so we don't have prepayment penalties, right? So there's never going to be a penalty for a fantastic builder who's out of it in 6 9 months. It's like amazing, right? The better you can get to the finish line, get things sold, get things stabilized, we can all reach that finish line. So we
hmm
don't have a prepayment penalty. But yes, majority are 12 to 18 months. For if we're kind of refinancing into a DSCR,
Yeah.
maybe the sellout is not selling out, or maybe
Yeah,
the market's kind of taking a pivot. Those are kind of your, I would say, like typical conventional 30-year, right? And we can kind of look at that over a 30-year,
I
30-year
see.
loan. hmm
Got it. Yeah,
Yeah.
I just did a DSCR loan for a recent purchase, and that's why I asked is because that is a 30 year. So it
hmm
sounds like what you're seeing is these folks they get into a loan. One thing that's common is if something's not selling out,
hmm
or if they have a flip project that's like again sitting on the market or something
Yeah.
like that. A common strategy is to refinance into a DSCR type of product. Got it.
Exactly that. And that's also the conversation that I like to have on the front end too with the borrower. It's like, hey, the market's not maybe where you want to be. If your original intent was to sell this, fine, we can refinance on DSCR. But I also like to have the conversation, for example, like, hey, Saad, you're considering a DSCR, but is this something that you kind of want to refinance and then maybe after 2 to 4 years sell,
Mhm.
and kind of say, okay, maybe I'll have a renter come stabilize the property, and then kind of put feelers out there, maybe a little
Yeah,
off market action, maybe kind of like, still soft marketing this. So I always say, like, is that a possibility? Because there is a prepayment penalty with the SCR loans, right?
sure.
And so
Yeah,
that's what I tell folks that, up front, because it's like, hey, that's something that
Yeah.
you want to consider, right?
yeah.
Just kind of laying out your options and kind of road mapping collaboratively with the borrower, which route do you want to go down, if that makes
Mm.
sense.
Yeah.
Like, what do you see like, what is your 3, 5, 10 year plan with this property, and then let's kind of work backwards from there and then find the best course.
Awesome.
Gotcha. Great.
Mhm.
I have one simple question, then actually just like
Yeah,
we'll a hypothetical scenario. But
sure.
the simple question is the when you get the loan, is the money released over the course of the allotted time, or is like the loan all up front and you're paying the interest on it in totality right away?
Yeah, great question. So the way that it works is you close on the loan
Yeah.
tomorrow, right? Um, we have borrowers that draw on their loans weekly, monthly, or not at all, right?
Okay.
So then it's kind of like, hey, do you need money here? Like,
Yeah. Yeah. Yeah.
so so the way that that works over the course and the lifetime of the loan is as you draw, you will then be the interest will be charged as you draw. Right.
Okay.
So you can, we don't tell you, the frequency of that you need to draw. So that's kind of how it works. Right. And we kind of do our, it's a kind of over the total loan. Right. So, I mean, what we can do is also up to 90% LTC, which is huge, right? Because it's kind of guys that say, what does this look like for the course of what can I expect, essentially. And so what's awesome is that we have a fantastic asset management team. And kind of what I was talking about earlier is like, hey, you work with me on the front end, right? We kind of get you across the finish line, we get your loan
Mhm.
closed. But then it's like, to your point, like, what now,
Yeah.
right? Like, so
Where
how does
how do I
this
get
work?
it?
Exactly. So I
Yeah.
actually just
Yeah.
got off the phone with a client of mine, and directly who will be his asset manager post close. And so we have a great team. They'll give you their contact numbers, they'll give you their emails, and for better or for worse, they'll answer your call at any time of the day, right? Because
Yeah.
we have to. We don't answer, nothing's getting done, right?
Yeah.
And for all of us. And so it was great and really beneficial too for borrowers to be able to connect with all of us on our team, even pre loan closing, so that they know exactly what next steps are. And the asset manager can speak on, hey, this is what's going to happen for the inspections. This is how you can expect your draws. This is the platform, that we use in order for you to stay on top of, all these draws, how they
Yeah.
work, on top of your budget. And that's something that we help folks with as well. Some of the builders that we work with have been doing this for 10 years. Someone's been working for 10 months, right? So
Hmm.
it's the same tactful process that we use for everybody. But it's really nice to just kind of stay dynamic with everyone. So
Awesome.
yeah.
So, I mean,
Great answer.
obviously, there are
Cool.
other there are a lot of hard money
Yeah,
or private financing type of
sure.
companies out there.
Hmm.
And you mentioned, one of the key things that you guys bring to the table is that, you're a true partner. And you mentioned
Mm,
there's like several people involved in the journey, not just when
right.
it closes, but what happens after, especially in a 12 to 18-month time frame. Like, you need things to be tight, right?
Mhm.
Is there anything else that separates Cardinal Capital Group from other players in the space, whether local or national? I mean,
Yeah. Yeah, absolutely. So we are New England based. Like I said, offices between Boston to Connecticut. So I think, especially coming from the agent side of it, it's pretty rare to know what your lender looks like, right? In the sense that, who am I talking to here?
yeah,
And as a builder, it's really nice to know that, like, actually just came from Lexington today. where we did a mid-construction refinance for a borrower of ours. And he was like, wow, I've actually never had a lender come to my site, let alone meet them in person, right?
Mm.
And so that's where we're real lenders, not partners. And, we actually did a content shoot there for him as well, where we talked about, of course, the process of the mid-construction refi, but also his experience. And he mentioned himself, and this video is yet to be released, but I'm assuming within the next week or two. But him himself was talking about, I've worked with lenders that feel like my opposition sometimes,
Mm.
where I have to jump through hurdles, right? And banks, you have to provide yearly financials on, annually they'll kind of check in, or monthly. Can I see your budget? Can I rehash this? Things like that. We work with you on that. We don't go through all those financials on an annual basis, but we work with you to ensure that you always know we're on the same page. We'll come out to your property to advertise your project. And then, actually, funny enough, as a past agent, I even had some agents be like, hey, where is this? So maybe to sell for them too,
Yeah.
Right,
right?
Yeah.
right,
And so I just
yeah,
put them in touch with the builder. But just kind of really being like, oh, you care about us on the front end because we always know who we're talking to. But you're putting your money where your mouth is, literally. But by coming out to the site visits and being like, oh, you're advertising my property, you're walking the property, what we're building here, and we're a local lender that we have the ability to do that. So it's
right,
just making sure, and I think you both would agree, it's like working with people you like in this industry is super important.
That's
You
it.
work with
right,
friends, you work with people
yeah.
you're friendly with, you work with people that can get it done, and you know that. So it's just about reliability at the same time as it is about, actually delivering.
Yeah, yeah, I mean, like, we work with a lot of lenders, and obviously the type of business that you guys are in, the type of projects and that you're financing and things like that, a little bit different. But I
Mhm.
can't say that many lenders actually show up to the house that they're
Right.
potentially financing. So that's
Yeah.
pretty rare and a definite differentiator. So that's pretty awesome.
Yeah, absolutely. And your project is just as important to us, right?
Mhm.
It's we want to make sure you're good throughout the project, right?
Mhm.
So it's like our job isn't done unless you're done, right?
Mhm.
So we want to make sure that you know that. Yeah.
Awesome. One thing where I'm super excited about. Obviously, you guys can help consumers, you can help builders, you can help flippers, you can help people who are in a bind, what have you. Myself as an agent,
Mm-hmm.
and I've shared this with Mike. Like, it's exciting to know that we have the conventional financing lenders, but to have somebody else who is an expert in this area and has worked with developers in the past as an agent, I think that's a huge value add for our team. So excited to kind of like, continue this partnership and kind of like work on different opportunities together. Case in point, I've got that listing or off market listing in the South End,
Yes.
and I'm excited to see what numbers Alyssa puts together. I owe her some numbers first so she
Yes.
can actually do her job. Basically providing the renovation numbers, the
Yes.
aftermarket value, or sorry, after renovation value and things like that. Those are going to be super helpful for me to properly market this listing, right? So even
Yeah.
if it is off market, so that's a huge value add for me that I haven't had in the past.
Yeah, okay, absolutely. And I'm really excited to see what you do with the off-market listing, and of course, sales on the back end will be a really
Right,
fun one. But yeah,
right.
absolutely. Like, love working with you guys both on that kind of stuff, right? Your off-market or on-market development listings,
Hmm.
we can look at, because it's like, you can send it to 10 Bob the Builders, and it's like, how do I buy this? You know, what do
Right.
I need to buy this, right? That's kind of the first thing when you go shopping. It's like, okay, I want to buy this. How much is it? How do I buy this? Do I finance
Yeah.
it? How do I get the financing,
And
right?
I know there's a couple of agents listening in here. One thing that I think was really powerful, I think it was you that shared it with me, was like being able to put these numbers in the actual deck that we're putting
Right.
together for people, so they don't have to go doing like the research and the guesswork and things like that. They have somebody they can reach out to with real hard numbers right there
Hmm.
in front of them, so they
Yeah.
can make a decision faster. It's
Yeah.
Right.
good for the agent. It's good
Exactly.
for the seller. It's
Mm-hmm.
probably much better for the buyer too because
Yeah.
there's less confusion and less running around that they need to do.
Right.
So huge value there. Now that we're doing, Mike and I and the team are doing more, not just listings, but more development type of opportunities.
Mm-hmm.
We're going to need your help.
Yeah,
So
absolutely.
excited for that.
Yeah,
Yeah.
yeah. I mean, we all need to spin the wheel, right? And you all need to kind of work together. And the more value you can help each other, and essentially like educate each other and kind of what you do, the more value you can add to your client and things like that. So your net worth is your network. So it's a big thing in our
That's true.
industry.
Yeah,
Yeah,
absolutely. Mike,
yeah.
any final questions, or Alyssa, any final thoughts?
Yeah, I think I'll go. I think it would be beneficial for anybody listening to just go over a hypothetical situation, or it's actually real. But so I have a client who has a four family
Okay,
in Lowell. They
okay.
also have a lot that's been subdivided and approved for another 2 units. So we're talking
Awesome.
six total.
Okay,
His goal at the beginning was to renovate each one as people moved out of the existing
okay,
building.
okay.
He did that for one of them.
Mm-hmm.
He then demoed two and
Okay,
then ran into a problem with the now the code needs to be an irrigation system that it did not have before because it's a unit or a
okay,
4 unit building. So, and he's running a different company to the side. So I think the dream is kind of like slowly coming to an end of like this thing and just needs to kind of sell it.
okay.
So how do we market it? I guess like where would you come in terms of like if I'm trying to sell this
Mm-hmm.
entire portfolio
Yeah,
now, where
yeah.
some things are like mid build
Right,
and
right.
other things are approved, what you come in like basically kind of what you did with Sod too. Just would curious as to that thought
So
process.
that, yeah, exactly. So a few things in this, well, like real scenario,
Yeah.
a few
Yeah.
things in
Yeah.
this
Right.
real
Yeah.
scenario is that what we would consider, right? So say Bob the builder comes in and he's considering this. What he would consider is saying, okay, am I buying this project with plans approved, with permits approved, with ZBA? And
Yeah.
well, what is that? Right? So hypothetically, because I'm not sure what it could be, right? Zoned for or permitted for, what have you,
Yeah.
is that if it was for 10 units, for example, right? And Bob wants to come in and build 10 units. So one thing that this builder would have to consider is what his sellout or her sellout would be for 10 units,
Yeah.
what the budget would be as a guesstimate, right? If they're working with the GC or if they are a GC, their best guess.
Hmm.
Of course, the acquisition, and that takes into account what your acquisition would potentially be, considering if you're selling it fully approved or not.
Hmm.
So a bunch of things. We kind of work backwards to be able to determine the correct financing, right? Because we provide financing on several products, right? Light rehab, heavy rehab, ground up construction. If it's current mid construction, a rate and term refinance, right? So we kind of take what this project could be. I'm assuming it would maybe be, well, it would be a ground up construction if they were kind of knocking all down these structures,
For the
building 10 units hypothetically,
yeah.
right? So we kind of work backwards on what the final product would be, what the budget would be, what the sellout would be, and then kind of be able to underwrite that from there.
Okay, I understand.
Yes.
Yeah,
Hmm. Yeah.
right.
Does that help?
Yeah,
Excellent.
that's exactly what we're doing now.
Right.
So Alyssa literally gave me a list of here's the things I need.
Right.
Like
Yeah,
Exactly.
in
Yeah.
order to, and that was
Yeah.
obviously, I mean, I'm a to-do list type of guy, so
Oh,
yeah.
okay.
so like having that list is super helpful.
Yeah.
I mean, one of those things is missing, and I need to get that. And once I have it, then she can go to work, right,
We're off to the
and give me
races.
what I
Yeah.
need. Yeah. So yeah, if you're an agent listening, I mean, obviously, awesome partner. Reach out to Alyssa, follow her. She has great content too. And you'll be hearing Alyssa will definitely be like I mean, it'd actually really be cool to do some like joint content at some
Yeah.
point
Hmm.
too
Yeah.
with some of the
Yeah.
things that
Absolutely.
we're working on that we have coming down the pipe. So more to
Hmm.
come from Alyssa for sure.
Okay. Awesome. Well, thank you guys. Thanks for
Of
having
course.
me.
Thanks,
Yeah.
And
Alyssa.
Yeah, absolutely. And let me know, Mike, if we want to connect on that too, on this kind of real hypothetical scenario.
Yeah,
And
yeah, yeah, yeah,
I
yeah,
can
yeah,
help
yeah.
you out with
Well, you'll
that.
get an email shortly. Yeah, yeah,
Okay, perfect,
Love it.
yeah.
perfect.
Love it.
Awesome.
Awesome. Alyssa, thank you so much.
Well, thanks, guys. Have a good night.
You
Appreciate it.
too. That's
Thanks,
Bye.
Alyssa.
Alyssa.
That's Mike. I'm Saad. This is Story Time. See you guys soon.
See ya.
Bye, everybody. Bye bye.
Bye.